Welcome to Global Tax Talk. I'm Will Morris, and I'm delighted to be joined by Manal Corwin, who is a director of the Centre for Tax Policy and Administration at the OECD. Possibly the most difficult job in international tax right now. Welcome, Manal.
Thank you.
So we've seen lots of guidance coming out recently on Pillar 2, much of which is very helpful, but all of which is quite complex. You've heard plenty about that from taxpayers, including today. But are you actually hearing concerns from any governments about that? And in relation to that, is there any chance, do you think, of permanent safe harbors coming anytime soon?
Well, yeah, let me take it in two parts.
Sure.
I think with respect to your first question, there's definitely a tension. You've got taxpayers who are eager to get clarity on aspects of the rules. They're new. They want additional guidance for interpretation, and governments also seek that input. On the other hand, there's also concerns, particularly among governments, that additional guidance is difficult because they've already adopted rules and they're concerned about incorporating any additional guidance into the new rules. And they're also worried about building on complexity, and we have to be careful about adding to the complexity. So it is a balance, and we need to achieve that balance. I think with any new rules, in the domestic context, you see new rules emerge, and there needs to be, in the implementation phase, additional input as companies start implementing and have to sort of see the issues that emerge and countries start implementing. The hope is as we move out of the implementation phase, we won't rely as heavily on the guidance process, but maybe rely more on the tax administration and dispute resolution to create clarity around the implementation of the rules.
Great, thank you. So obviously there's been a lot of take-up in Europe, particularly in the EU, but obviously outside of the EU as well, in some G20 countries. But not that many countries in Africa and in Latin America have announced plans to implement. So what are your expectations for those countries? How do you see this spreading out, and when, for that matter?
Well, I think certainly in terms of the countries that have formally announced, their majority have been in Europe, and that's because there's an EU directive requiring the implementation. So it's natural that we see those countries to be the first adopters. And the public announcement of countries in other parts of the world, there are fewer. What we are seeing behind the scenes outside of the public announcements is increasingly a number of countries, developing countries included, are evaluating now domestic legislation, in particular domestic top-up taxes, and beginning to formulate them, working with OECD to review those rules and get them ready for adoption. So I think it's less apparent to the public, but there are actually quite a few, and you will see in the coming months more and more countries coming on board.
Great. So let's switch to Pillar 1, if we may. So what are your expectations, or perhaps hopes, I guess, for the Inclusive Framework members to actually reach a deal on the Amount A MLC by the end of this month, which is quite soon, or at least sometime very soon, shortly after the end of the month? And do you think everybody will then sign and then ratify?
Well, I think in terms of hopes and expectations, certainly expectations, we have continued to make significant progress in closing gaps amongst members on various issues, in particular on the MLC itself, and now a continuing conversation on the architecture of Amount B, which is very important. As you know, they are a package. I think that the co-chair statement that was released at the end of May after the most recent Inclusive Framework meeting showed the progress that's being made. When we published the MLC, there were footnotes there that evidenced areas where several countries who are identified, Brazil, Colombia, and India, had concerns. And with the co-chair's statement, there's definitely been gaps closed, and we were able to also welcome the expression of interest for France and Brazil to potentially host a signing ceremony. So we continue to make progress. Countries continue to stay at the table because we're making progress. We will make every effort to be able to, by the end of next week, say that, it's done. There's a chance that we won't be done. But I think the fact that countries remain at the table and talking is because each of these milestones, whether we miss a date or not, we're closer to the finish line, and the commitment is there.
Okay, so you've been at the OECD as director of the CTPA for, I think, just a little over a year now. So what are your priorities beyond the pillars? I hope you have priorities beyond the pillars, and how can businesses prepare for those? And perhaps even more importantly, how can they help you? How can we help you in that process?
The institutional priorities certainly is to continue to support the implementation of the standards that have already been adopted. So Pillar 2 in particular, the global minimum tax, the subject to tax rule, where we have a signing ceremony scheduled for the 19th of September. We want to make sure we're doing everything we can to facilitate implementation and also support developing country adoption. In terms of other priorities, there's a whole host of work that's been going on in addition to the pillars that isn't quite as visible, but is core and foundational to the OECD. We continue to work on those in the area of policy and statistics, revenue statistics. Tax administration is absolutely critical, tax administration 3.0. And then we are getting the input from delegates and other stakeholders as to future priorities. Among the areas of interest that have emerged have been, focus on global mobility, particularly post-pandemic, but a broader concept of global mobility for a number of countries, including things like the mobility of high net worth individuals and transparency with respect to those. I think transparency more generally is an important agenda item for the OECD, and continue again to reinforce the work that's already been done on transparency. And then anything we can do to continue to simplify and streamline, rationalize the systems. New standards mean maybe we can lift the foot off the gas a little bit on standards that no longer are relevant. So a number of areas, I think it's the members that identify the priorities, but with really important role for the business community and other stakeholders to provide input as to what matters most for global collaboration in tax.
Good. Well, you know where to get a hold of us.
Yeah.
Manal, thank you so much for joining us. This has been great, and good luck with all of those upcoming deadlines. And thank you for joining us, and come back again so that you stay global tax ready.